Welcome to the Deep Dive. Today we have a financial whiz with us who will help us understand a company.
A company you might not have heard of.
But you've probably used their products. We're talking about Cello World Limited.
That's right.
Cello World is an Indian company, and they're kind of a quiet giant. They make everything from water bottles
And lunchboxes.
to pens and furniture.
They really are everywhere.
They are, and that's what makes this deep dive so interesting. So their recent performance, well, it's been a little flat.
Kind of. Revenues and profits are pretty much the same as last year, which isn't ideal.
Okay, so flat growth isn't exactly, something to write home about.
Right.
But are you saying there's more to this story than meets the eye?
Oh, definitely. You have to think about it. India is facing some economic challenges right now.
Yeah.
Inflation is high. Consumer spending is a bit cautious. But Cello World is holding steady. That actually tells you something.
Yeah.
About their resilience, their adaptability.
It's like they've got this kind of inbuilt stability.
Yeah.
Because they're not putting all their eggs in one basket.
Right.
They've got all these different product lines. They can balance each other out.
Exactly. And their consumerware business, those water bottles and lunchboxes?
Yeah.
That actually saw 5% growth.
Oh, wow.
But their writing instruments and their molded furniture businesses, they dipped just a little bit.
Well, I was reading about some of the global supply chain issues, like the Russia-Ukraine war.
Yes.
And there were some big shipping delays, right? Could that be impacting them?
Absolutely. Things like the Russia-Ukraine war and those delays really threw a wrench in things. They were definitely impacted.
So these delays are like getting caught in a massive traffic jam, basically.
Yes. Nobody's fault, but it slows everything down.
Exactly.
But here's where things get really interesting. Cello World is actually quite optimistic about the rest of the year.
Oh, really?
They are. They're expecting a really strong second half.
Yep.
And that's tied to two things. India's festive season,
Right.
where everybody's buying gifts, prepping for celebrations, and their brand new glassware manufacturing plant.
Now, this new plant is exciting. It's state-of-the-art, and it allows them to kind of become this one-stop shop for glassware in India. Imagine like those beautiful, sleek glass tumblers.
Yes.
Or those dinnerware sets.
Yeah.
All made right here.
In India.
Yeah.
It's a big deal. Because right now, India imports a lot of its glassware.
Oh, really?
Primarily from China. So Cello World stepping in with this local production could be a game changer.
So they're really capitalizing on this wave of make in India.
Exactly.
Becoming more self-reliant.
Yes.
And boosting the local economy.
Exactly.
Really clever move.
And the scale of this plant is just impressive. It has a capacity of 20,000 metric tons per year.
Okay, so try to picture that. 20,000 metric tons. It's like filling up an entire cricket stadium with glassware. Is that even possible? And what does that translate to in terms of revenue?
It's massive. We're talking about a potential 230 to 250 crore rupees in revenue, which roughly translates to about 28 to 30 million US dollars. At full capacity, that's significant.
Okay, so they're holding steady with their existing business.
Yes.
They're going all in on this glassware expansion. But wait, didn't they also merge with another company recently?
You're right, they did. They merged with Wimplast, which is another plastics company.
Now, why would they merge with a plastics company when they're expanding into glassware? It seems a little counterintuitive.
It might seem that way, but it's actually quite clever.
Okay, I'm intrigued. Tell me more.
So by merging, they're streamlining their operations.
Right.
Wimplast manufacturing facilities can now be used to produce other Cello World products. So it creates this more efficient and potentially cost-effective system.
So it's not just about expanding their product portfolio. It's about becoming leaner.
And more agile.
Exactly, in their operations.
Exactly. Creating synergies and maximizing efficiency.
So it's like they're combining forces to create this super efficient production powerhouse. Yeah. But isn't that a bit risky? Merging with another company can be tricky.
It can be. But this particular merger is seen as a win-win. It helps Cello World internally, and it also boosts their share value, which is great news for their shareholders.
So it's not just about growth, it's about strategic growth.
Exactly. And it seems like they're always on the lookout for new opportunities. Remember that smaller plastics company they were considering acquiring?
Yeah.
Well, it's still on the table. They're being cautious. They're doing their due diligence. But the interest is definitely there.
So it sounds like Cello World is constantly evolving. They're adapting to the market and making these bold moves.
Yes, they are.
I'm hooked.
And we've only just scratched the surface. There's so much more to unpack about Cello World's financial landscape. And that's what we'll be diving into next.
Welcome back to the deep dive. Let's unpack the financials behind Cello World's ambitious moves, starting with that impressive new glassware plant. Yeah, it's really exciting to see them potentially becoming the go-to source for glassware in India. But setting up a plant like that must have cost a pretty penny.
Oh, absolutely. They invested around 250 crore rupees, which is a significant amount. 250 crore rupees, that's a lot of money, even for a large company. But it shows their long-term vision.
Yeah, they're not just throwing money around. They've crunched the numbers,
Yeah.
and they see a real opportunity here.
Exactly. They expect a solid return on their investment. And their calculations seem reasonable. They're looking at a payback period of about 5 to 5.5 years, which is pretty standard for this kind of project.
It's fascinating how they're aiming to, replace imports and capture a big chunk of that market share that's currently dominated by those foreign players. It's bold for sure.
It's smart. By offering competitive pricing and a reliable supply chain, they can attract customers who were previously relying on imported glassware. So they're not just competing, they're trying to reshape the entire market.
It's like they're saying, hey, we can do this right here in India,
Yeah.
and we can do it better.
And it resonates with that Make in India initiative.
Right.
And that growing desire for high-quality, locally produced goods.
Okay, so we talked about the glassware venture, but let's shift gears a little bit to their merger with Wimplast. At first glance, merging with a plastics company when you're pushing into glassware seems a little counterintuitive. What's the strategic thinking there?
It might seem counterintuitive, but it's all about efficiency
Yeah.
and maximizing resources.
Okay.
By integrating Wimplast's manufacturing facilities,
Right.
they can leverage that existing infrastructure to produce a wider range of products,
Right.
which means potentially lower production costs, a more streamlined supply chain,
So it's not just about expanding their product portfolio, it's about becoming leaner.
and more agile.
Exactly, in their operations.
Exactly. Creating synergies, maximizing efficiency. And speaking of efficiency, their consumer wear business, those water bottles, lunch boxes, it's currently operating at around 75% capacity utilization.
So that means they still have room to grow.
Precisely. And they're expecting to reach full capacity within the next year, which suggests they're anticipating continued growth in that segment.
It's like they're building this bigger oven to bake even more of those consumer goods.
Yeah.
They're prepping for success.
That's a great analogy. And remember that potential acquisition of a smaller plastics company we talked about earlier.
Yeah.
That's still on their radar. They're proceeding cautiously. They're conducting thorough due diligence before making any commitments, which is a sign of a responsible company.
It sounds like they're not just chasing any deal that comes their way. They're being strategic and selective.
Absolutely. Focusing on acquisitions that align with their long-term vision and can add real value to their existing operations. It's about playing the long game.
With all these investments and expansion plans, it makes you wonder about their financial health. Are they overextending themselves, or are they managing their resources well?
From what we can see, they seem to be in a pretty good position. They have a healthy cash flow from operations, and they've used smart funding mechanisms to raise capital. One of them is called a Qualified Institutional Placement, or QIP. It's basically a way for companies like Cello World to raise money from big investors, which shows they have serious backing for their plans.
So it's like they're building a solid financial foundation to support their ambitious growth plans. They're not just spending recklessly. They're investing strategically.
Exactly. And their financial discipline is evident in how they manage their debt and how they use their capital. It's not just about growth, it's about sustainable growth.
It's inspiring to see an Indian company like Cello World, navigating the global economic landscape with such prudence and such strategic foresight.
I agree. They're a prime example of how Indian businesses can not only survive, but thrive in this competitive global market. Their journey is a reminder that success comes from a combination of adaptability, strategic planning, and a deep understanding of the market.
This deep dive into Cello World's financial strategies has been truly enlightening. They're clearly not afraid to make bold moves, but they're also doing it with a sense of responsibility and long-term vision.
It's been fascinating to explore how they're using these financial tools and strategies to fuel their growth ambitions.
Now, for the final part of our deep dive, we'll take a closer look at the challenges and opportunities that lie ahead for Cello World, particularly in the context of the evolving Indian consumer market. Stay tuned for part 3, where we wrap up this deep dive. Welcome back to the deep dive. We've gone over Cello World's financials, their expansion plans, and that merger with Wimplast. But now let's step back and look at the bigger picture, the really exciting landscape that Cello World is operating in.
It's so fascinating how they're navigating these global economic hiccups like everyone else, but at the same time, they're in a perfect position to benefit from some major trends that are happening right here in India.
Yeah, India feels like it's on the verge of something really big. You've got growing middle class, rapid urbanization, a rising awareness of sustainability. How does Cello World fit into all of this?
They're right in the sweet spot. Their products really cater to these everyday needs, but they're not just basic anymore. They're really focusing on quality and design, which resonates with this new wave of discerning Indian consumers.
It's like they understand that Indian consumers aren't just looking for functionality anymore.
Right.
They want products that actually reflect their lifestyle
Yeah,
and their aspirations.
absolutely. And Cello World's diverse product range allows them to cater to all these different segments of this evolving market, from those durable lunchboxes for students to that elegant dinnerware for special occasions. They've got something for everyone.
But we've also talked about those external factors, things like the shipping delays.
Right.
India relies heavily on imports for certain goods.
Yes.
Could that reliance on imports actually be a vulnerability for Cello World?
It's a valid concern, and it's one that they seem to be addressing head-on. Their move into glassware manufacturing is a prime example.
Yeah.
By producing locally, they're reducing their dependence on those imports.
Yeah.
And they're potentially even mitigating some of those supply chain disruptions.
So they're creating a safety net,
Yeah.
making sure they can keep meeting that consumer demand, even if something happening globally.
Exactly. And this strategic move, it strengthens their position and it contributes to India's push towards self-reliance and that domestic manufacturing. So it's a win-win for Cello World and for the Indian economy as a whole.
It seems like Cello World is in a really strong position. They're financially sound, they're making those strategic moves to expand, and they're tapping into the pulse of this evolving Indian consumer.
I couldn't agree more. They're really doing their homework, they're anticipating the trends, and they're taking calculated risks to drive their growth.
This deep dive has given us so much to think about. From understanding their financials to analyzing their strategic positioning in the Indian market, it's clear that Cello World is a company on an upward trajectory.
It's been a pleasure exploring their journey with you. They're definitely a company to watch, and I'm curious to see how their story unfolds.
This deep dive into Cello World Limited has been a real eye-opener. They're not just making products, they're shaping the landscape of the Indian consumer market. What stood out to you most about Cello World's story? What are your predictions for their future? We'd love to hear your thoughts. And if you enjoyed this deep dive, don't forget to like, subscribe, and share it with your friends. Until next time, keep exploring, keep learning, and stay curious.